Hello, this is Vince from Sniper Day Trading, and got a monthly chart of the S&P 500 here on top, the Nasdaq Composite in the middle, and the Dow Jones in the bottom. And you can see that we have made it right up against. This is now a monthly chart. For about the last 3 months, you can see the Nasdaq has just traded sideways, has not really made any ground, and we are at the end of the month. So you can see that actually, yeah, we haven't not really made any ground. The Dow has made some ground where it's continued its acceleration, and the S&P is the high end of its range, but still has not really made a whole lot of ground. You can see the last 3 bars we traded here on the high, 1080, and we're at 1110, so maybe 30 points in the last 3 months. This here is just some overhead resistance that we've talked about before. We've got a high up here as of last year's high. The outside bar takes us down to where we are right now. That red line where I drew, where I've got this bar, we're sitting right up against long-term resistance in the Dow, the S&P up here, and the Nasdaq right here. You'll notice that this line goes back for the Nasdaq all the way back to 2001, and you'll see that as I extend that out. 2000 was the high back here, and you can see we've got resistance here in 2008, again 2008 and a half, say summer of 2008, challenged and tried to make a rally just before the drop there in late 2008, and then we did drop and then have come back, and we're right up against that same resistance, where you can see the corresponding Dow is here from higher levels, and the corresponding S&P, which is basically a double top from the high of 2000 back to the high of 2008. So we basically put in a double top, and a nice, very nice topping process that took place here, setting the stage for the big drop. Now this type of a bottom here to me looks more like a V bottom. We did get some consolidation here, a flush out, but then a rally pretty much straight up. And when I see a formation like this, if I was looking at this, even if it were a tick chart or a minute chart on a daily basis or a small time frame, I would look at this, actually all 3 of these, and this where I've got these 2 lines. This is basically a rising wedge in an uptrend, which is bearish when it's broken. So far at this point, it's not broken. It's at the high end of the range, but if this line gets broken, then we are more than likely going to come back to the middle of the range, which is 890 and 840. This is the middle portion of this rally's range from the bottom to the top to the middle. So we'll see what happens. This Nasdaq resistance here goes way back, like I said, and it's going to take some effort to get over that. Seeing now that we've got the sentiment figures that just came out, it's not looking too good. Very, very few people are bullish right now, and that is actually very bad. We're down to 17% think that the market is capable of going down for a sustained bearish move, which is really a screaming sell. Very few people think the market is going down, and it more than likely will now at this point. You can see this rising wedge. This line here was a line figure that I talked about back in the end of June. I think it was the last day of June on my blog, and this is the line that we broke. We sold off several hundred points, or 15 or 1400 points on the Dow, 100 and some odd points on the S&P, and then that set the stage for this rally back up. But that line, that same line extended, formed the resistance area, and then thus the bottoms and the tops getting squeezed. Once that gets broken, you will see lower prices. That's a pretty solid rising wedge in an uptrend, and I could tell you when that gets broken, we will more than likely see a retracement back to the middle. Now that's just reading the market, knowing how to read the market, and just some basic stuff there, but a lot of people really don't know how to do that, and you combine that with a few other little timing tools and other things, you can get a pretty good read on market action. And hold on just a moment. Okay, the last little read, this is a daily chart. This is the last pivot low. If that gets taken out, we will see lower prices, and then if this gets taken out, we will definitely see the 800 range on the S&P.